Broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. My name is Mark Toby, and I am the Disability Income Specialist here at One Resource Group. And I would like to welcome you to our final installment of webinars in May that coincide with Disability Income Awareness Month. Today, we have invited Lori Boggs with Peterson International Underwriters to lead our presentation. Peterson International is an American cover holder for Lloyd's of London, and Lori is a Regional Vice President of Sales. The primary focus of her presentation today is to show how Peterson International Underwriters provides insurance solutions for disability risks by using the strength of the world's insurance markets. And we're also going to learn strategies on how and when to utilize Lloyd's of London specialty DI products for clients that are underinsured, unhealthy, or have an occupation that traditional carriers won't cover. At any time during the presentation, please feel free to send questions through the chat feature, and at the end of the presentation, we'll have a lengthy question and answer session. So at this time, I would like to present our expert in the specialty risk disability market, Lori Boggs. Hi, Lori. Thanks for being here.
Hi, Mark, and thank you all so much for joining. I'm happy to be here, and it sounds like I'm taking up the rear with the Disability Insurance Awareness Month, so that's really good news. Okay. So what we're going to do today is I'll talk a little bit about Lloyd's of London, how Lloyd's of London works, Peterson International, who are we? An introduction to high limit DI. We also have business products. I'll go over some case studies as well. So this is the first known picture out of the Gazette of Lloyd's Coffee House. This is where it all began in the 1600s. And this is really a place where men would go to meet and have coffee or probably beer and alcohol. But they would talk a lot about their issues when their ships didn't return to port from sea. And as a ship owner, if you lose a ship, you could really, you would have devastation. And so they got together and talked about it, and they decided to pool their money and help each other cover each other's ships if they didn't return from sea. And that is where Lloyd's began, in this coffee house. And interestingly enough, this woman standing out front would have been either going in to deliver something or maybe working at the coffee house, but she would not have been welcome in the coffee house. Women weren't welcome. So things have changed. This is what a ship would look like that Lloyd's covered way in the 600s, and this is today what it looks like. We cover a container ships, and the marine industry is still their largest risk that they cover. This is an example of a risk being covered in the 1900s, and this is where the word underwriting was coined from, because the risk was written on the piece of paper, and then underneath would be the lead underwriter or the lead person that would cover the risk, and then everybody else would follow suit underneath, and that's where the word underwriting came from. And this is actually the Titanic. So Lloyd's of London did cover the Titanic, and this is the actual underwriting form that shows the coverage. Lloyd's today, the first picture on the left this is what it looks like today. It's in London on Lime Street, and the reason why the building looks so funny is because when the architects were planning and drawing out how the building was going to look, one of the main requests was to have all of the services for HVAC, electrical, plumbing, and everything outside of the building, so that if anything happened and something needed to be serviced, it wouldn't disrupt business. On the right top picture is what the floor looks like. It's all open. That's the first floor. That is where the marine risk is held, because that's that's their bread and butter. So they are on the first few floors. And interestingly enough, many people don't realize this, but Lloyd's is rated by the top rating agencies, and they have very, very strong ratings. Lloyd's continues to be a meeting place. So Lloyd's of London is not a business or an insurance company. It is simply a place to go where people can do business. Who you're doing business with, or who we're doing business with, are the syndicates. And each syndicate does have an office set up in Lloyd's of London. And each syndicate, there's about 100 syndicates, and within those syndicates, there's probably about 400 underwriters. And that's what you see in the picture below. Those are the underwriters, and this person sitting here is likely a broker waiting to speak to one of the underwriters about a risk. Peterson International is located in Valencia, California. We have 55 people in the home office. We're the largest personal lines cover holder in the United States by premium and also by number of employees. We focus on disability insurance. We also have some life products as well. And we have within our office a dedicated DI sales team who are experts in helping solve any issues that you may have with a case or a client. So one of our major product that we focus on is disability income, and we have a full suite of products, and people don't realize that we are not only in the traditional DI business, but we also have key person product. We use that quite a bit in the private equity market. We have business loan protection. That's been very active for the past couple of years. We also offer buy-sell and business overhead expense. So why would you come to Lloyd's of London, or why would you come to Peterson International? What we always tell people is, if you can get coverage domestically, we want you to do that first. We never want to replace or compete with the domestic carriers. We are actually very good friends with them all, and the domestic carriers refer a lot of business to us, especially in the high risk market. We work directly with a couple of carriers. But we have people come to us where their client has capped coverage, whether it's group LTD and DI, or just individual DI domestically. And when I say domestically, I mean any domestic carrier like Standard, Principal. They go to that carrier first, and then if they need more coverage, they can come to us, or you can come to us. Our goal is to get everybody to 60% replacement at a minimum. It's very important. We see people who have high incomes that come to us that only have 30% income replacement in the event of a disability. And we get a lot of calls when it's too late, unfortunately. And I'll talk a little bit about that when I go over case studies. One of the major things that we do is help if you have a client that's declined medically for coverage. We can help. And I tell people, bring everything to us. We don't read APSs, we don't do preliminaries, but we certainly can read an email asking if we can cover someone who has uncontrolled diabetes with neuropathy in their hands and feet. we can look at emails like that. And we certainly do quite a bit of that. Where we wouldn't provide coverage, or we may flip over to our accident only product, is when we have a client with a progressive disease that we know is going to end up disabling the client. And something like that would be Lou Gehrig's disease, ALS, and diseases like that, dementia. Those we may decline, or again, we may use our accident only product. But other than that, I've seen some stuff come across that, I didn't think we were going to be able to do it, and we did. So we have some pretty flexible underwriters, which is nice. We also can cover people who are over age. Underwriters get a little nervous when people are over age 75 for DI. But again, I tell people we can always try. You just never know. And then also we cover folks who have unique occupations. And we see a lot of this, pilots, so airline pilots, corporate pilots, we can provide coverage. We have a specialty product. I'll talk a little bit about that. Athletes, entertainers, we cover explosive handlers. We cover people outside the United States. I'll go over that as well. And we can cover non-US citizens as well. What I'd like to focus on right now is high income, because this is really where we see a tremendous amount of opportunity. So what is high limit disability? It's when you have a group LTD and an IDI plan that domestic carriers have issued, and their coverage is just not enough. It's not getting the client close enough to 60% income replacement. We will go higher than 60% depending on the taxability and the underlying plans. And we always try to go out with the max plan when we quote a case. But if we don't and you need it, you can always come back and ask for it. We have a lot of flexibility simply because we don't have to file our products and our underwriting plans with the states. We do have to be approved to sell our products, but they don't review everything. So we are, we can change what we cover and what we offer pretty quickly, and we do quite often. So why high limit disability? Again, we want to make sure that everybody has at least 60% replacement. So what does this look like? It simply starts with group LTD. This is great coverage. You should always make sure that your client accepts this coverage if their employer offers it. And then individual disability income is the second layer. This again is standard or principal, and they're capping coverage around 20,000, 30 to 35 with group, but individually I see them going to around 20,000. And then the third layer is the high limit disability plan through Peterson International. And again, this is for folks who are capping underlying coverage. And we see this around 300,000, 400,000, 500,000 and higher. We see quite very high incomes. But we also see people who only have individual DI at 20,000, and they're eligible for 100,000 more a month, and we can offer coverage in that situation. And here's an example of a surgeon earning 900,000 in annual income. The group LTD is $10,000 per month, which covered her income at 13%. The IDI was laid on top. I believe this, yeah, it was a surgeon, so they only went to 17,000 per month. And that got her to 36% income replacement, which is quite low. I don't know anybody that can live off of 36% of their earnings if they become disabled. So we came in and offered, we went up to 65%, again, because of taxability. and we were able to offer 21,750 more per month, which again got her to 65% replacement and 48,750 a month of total protection. We do offer simplified underwriting, and it's basically, if you have a client that's been approved by a domestic carrier like Principal or Standard, and they've been fully underwritten, we can use their underwriting as long as it's not more than 90 days old. So if it's less than 90 days old, we simply use that policy, and we need a copy of the deck page in our simplified underwriting application, and that's what we use to issue the policy. If you have a client that's had, you know, riders, ratings, that's going to be at underwriter's approval whether or not we can include them in the simplified underwriting program. So let's talk a little bit about guaranteed standard issue. And this is sold at the employer level. And I realize many people aren't in this space, but we do offer this to small-sized employers as well. They don't have to be large employers. And what we see is, this is a scatter graph of a case that has group LTD and individual DI in force. The LTD plan covered up to 200,000 of earnings. They layered the IDI on top, got that up to 400,000 earnings covered. And this is the opportunity on top. And this scatter graph with the red dots, those are all highly compensated employees. Definitely the C-suite is included here. I usually do a call out with the CEO and the CFO showing that, you know, those are two folks that are very important to the company and don't have enough coverage. If it's guaranteed standard issue and we have enough lives, and in order to have enough lives, for a mandatory plan, we need 3 lives, that's it. Mandatory means that everybody on the census is going to move forward with coverage. There's no choice. A voluntary plan, we need 10 or more lives, and that is where we give each employee or eligible employee a choice whether or not they want to move forward with coverage, but we also allow them to dial down coverage if they want to spend a certain amount of money each month on the premium. In this situation, if we have an employer that wants to offer disability insurance, they've been approved for the guaranteed standard issue program, we waive all medical underwriting. We use the census for financial underwriting. We also will add new hires, and we will handle increases on an annual basis. Our policies are a little bit different. We're not allowed to sell a long-term permanent policy. So we have a 5-year non-can policy. And at the end of the 5th year, we'll reach out and ask if they want to move forward with renewing the policies. And it's pretty simple, especially if it's GSI. We just need an updated census. We do discount the rates. And right now we see underwriters comfortably going up to about 100,000 a month, which is about $2 million of covered earnings. We do offer true ONOC and specialty ONOC for the full benefit period. Our benefit periods are 5 or 10 years. The enrollment is very simple. We help with most of the work, and I'll talk a little bit about that. And we offer benefits like you see in the domestic market, where we have automatic increase. We cover presumptive disabilities, residual. The policies during the term period are portable, and we also offer COLA. So on a voluntary enrollment, we offer a lot of support, and we'll sit down with you and go through a timeline. We provide all the email announcements. We like to drip on people. That helps increase participation. We have custom enrollment forms, and we do also do webinars and in-person meetings as well. And this is on the left, a screenshot of our online enrollment site. And as you can see, this person is an equity partner in a law firm. It provides the information about, how much coverage they have currently in force and what the replacement is, and what we're offering. And again, they can dial down coverage. As you can see, there's a slider button right there. And that can slide down and it'll show the monthly indemnity lowering and the premium that coincides with the reduction as well. We also offer paper enrollment, and we like to do both. We found that highly compensated people like paper, but we always like to provide e-enrollment as well, because it's very simple and it's pretty popular. On a mandatory enrollment is what we call census enrollment. So there's one form for the whole group. These are nice because you don't have to enroll each person. It's one form for the group. It requires 100% participation. But again, it's very simple. These cases go into force pretty quickly. So for business coverages, we talked about, why would you come to us? There's additional reasons. Buy sell, we see a lot of times one of the clients is overage, one of the clients is unhealthy, but the others are healthy. So not only can we layer on top of the traditional DI to get more coverage, but we can also help in situations where the domestic carrier won't cover them or can't cover them. Again, key person, we use this quite a bit. We see it again in the private equity space, but we also see this even in small clinics where there are specialty surgeons, and if one of them becomes disabled, they'll lose quite a bit of revenue. So they can use the proceeds for lost revenue, replacing and recruiting. The business loan protection, it's another great product. If you have a client that is getting a bank loan, a business loan, and is declined, or they need more coverage, you can come to us. We have severance DI, which is exactly how it sounds. If a company is severing their top executives, oftentimes the executives are guaranteed, coverage to continue, disability and or life. And what happens is when they leave the company, they fall off the census and the group carrier won't cover them. So we put a plan in place that looks like the group LTD, so that they can continue the severance agreement. So that's a contract. It's a severance agreement that we're covering. We do a lot of contract covering, and I'll go over a case study that explains it a little bit more in depth. And then we have overhead expense. And this is coverage that will cover the expenses, the owner's expenses. And what we see oftentimes is the domestic carrier saying, we can't cover this orthopedic clinic because there's 6 orthopedic doctors working there. And if one of them becomes disabled, the others are going to be able to cover for them. And that's just not the case. my daughter's a doctor, and she gets 30 minutes with each client. That's it. And she's completely booked all day. So I don't know how they think that they can just, cover everybody else's patients. It's just not possible. So let's go over a couple of case studies. One of the nice things that we can do is cover people who are working for a US-based company, but they're outside the country. So we call that foreign nationals, or expats working for a US-based company, and they don't have to be US citizens. They just have to have ties to the United States by way of an address, because we have to pay premium taxes. So in this situation, we see it quite a bit in the law firm space. And I had a request the other day for a mining company. They had executives all over the world. And so we were able to cover them. The nice thing is, in our language, in our policy language, it doesn't require the client to come back to the United States if they go on claim. And if you look at a domestic policy, there usually is a requirement that the client come back to the United States. And that's why they won't cover them. And it's also a language barrier. We have folks that can read APSs in any language. And so that's difficult for a domestic carrier to do. In this case study was, we covered the law firm in the United States. They were actually in Washington, D.C. And they had, 40 plus partners all over the world. And we were able to give them coverage because the IDI carrier would not. So we were able to step in and help out. This was a guaranteed standard issue case, so it was nice. This is a 49-year-old dentist who owned his own practice. He had a pretty hefty income of $1.5 million. He had group and individual DI. And it just wasn't enough. He was covered at $25,000 a month and was eligible for an additional $50,000 a month. So we were able to offer that. And what happened with this was labs were done for a domestic policy. They were less than 6 months old, so we were able to use those labs and exams. We don't require labs and exams for 10,000 or less, but because this was 50,000, we required labs and exams. So here's contract protection, and again, we see quite a bit of this, but this is a law firm. They had 75 partners, and in their contract, they were equity partners, and in their contract, it stated that if they become disabled, they're going to receive 100% of their income for 9 months. And the law firm did have a partner become disabled, and they still had to pay this partner, and it was a huge sum of money. So they decided to take out contract protection, and we offered 75 partners 100% income replacement with a 9-month benefit period, just to cover, again, cover that contract. Business overhead DI, this was a clinic, couldn't get coverage due to the number of physician partners. There were 39 partners, which is quite large. But the loss would have been great if one of them were to become disabled. So in this situation, we were able to offer guaranteed standard issue. We do offer that with our business products as well. And because it was a mandatory plan, we put the policies in place pretty quickly. All partners were covered with a $35,000 per month with a 24-month benefit period. Loss of license, DI. This is for pilots, and we see this quite a bit because no domestic carriers will cover pilots, and we cover, again, corporate, private charter airlines. We cover the really large airlines, in this situation, there were 134 corporate pilots. They could not obtain any domestic DI policies. And the airline was losing people because they could get coverage elsewhere. They really wanted to tighten up their benefits, and there's going to be a shortage of pilots pretty soon if there isn't already. And so a lot of carriers and airlines are doing everything they can to make the pilots happy. So HR wanted to enhance benefits, and they reached out, and we provided loss of license coverage up to 65% of the income. We capped coverage at around $25,000 per month. And again, in this situation, because it was guaranteed standard issue, there were no health questions or exams. We do offer fully underwritten pilot coverage, and this coverage, because pilots go to, they have FAA exams either every 6 months or every year, depending on their age. We automatically assume that they're very healthy if they're currently flying. And so we use the application to underwrite. We don't require any labs or exams, which is really nice. And the really nice thing about this product is that if the pilot goes to get their FAA or flight exam, and even if they have high blood pressure just that one time, they can't fly. They lose their medical certificate, and we deem that the onset of disability when they lose their medical certificate. And when they recover and they're okay to go back to flying, they have to go back and do another flight exam. Sometimes it can take up to 4 months to get an appointment. So we allow them to stay on claim until they go back and get an appointment and get their medical certificate back. So that's the end of disability for us. So it's a specialty product. It's a great product. It's very popular with pilots. From a medical standpoint, I looked at, some of the case studies, and I should have brought in more. One of the recent case studies that we worked on was a buy-sell case, and it was 3 brothers. They owned a cannabis company, and we do cover cannabis companies as long as they are in a state that has approved it. And 2 of the owners, again, there were 3 brothers, 2 of them tested positive for narcotics. We get that same story. We were at a, bachelor party. We only did it once. One of them said, well, I was trying it out, just to see what it was like. So they were declined coverage by the domestic carrier, of course. But we were able to provide coverage. So we see stuff like that. One of the things that we see quite a bit in the white collar market is people that are on Suboxone, and that is, or Suboxone. That's a replacement for someone that is or has had an opioid addiction in the past. And some people have to take Suboxone for the rest of their lives. It's just because of the way their body reacts when they stop taking it. They have to take it for the rest of their lives, and that deems them, unable to get any kind of coverage, life or DI. So we're able to cover those folks as well. So, you know, it's not just the small things. Sometimes we see some pretty large issues medically or financially, and we can help out. So, and with that, I'd like to open it up for questions.
Okay, Lori, thank you so much. We do have several questions. Some of them look like they're going to be short answers, but so the first question that we have, they're asking if if your applications are paper or are they e-app as well?
So that's a great question. We have all of our life products are e-app, and our DI will be e-app within the next few months. That's the regular DI app, and then followed by that will be our business products. So it's coming down the pike. The DI is coming down the pike very shortly. We're working on it.
Okay, and next question is, are you able to go higher than the 100,000, or is that the limit?
Yes. No, we are. We see the underwriters approving over 100,000 with fully underwritten policies. I've seen us go up to 250,000 a month. So yes, we can.
All right, and next question is asking if proof of insurance is required. So I believe this is in reference to when you had the 3 layers of coverage.
Mm-hmm.
And so they're just asking, I mean, are you requiring proof that they have these other 2 layers?
So that's a great question. So we ask on the application, and then we also have a couple of states. I think South Carolina is one of them, where you actually have to sign an affidavit saying that you were declined by 3 carriers. And the way around that is just to send an email to each carrier, because if one declines, likely they're all going to. So that's what we use for proof.
Okay, next question. Do clients have to reside in the United States?
They do not. They do not, but they have to have a presence by way of an address so that we can pay premium taxes. You know, sometimes it's a business, sometimes it's a summer home, sometimes it's a mother's summer home. You know, you can get creative.
All right, and next question, they're asking if, what is the reason for voluntary GSI plans? Is that just strictly employer's choice on how they want it set up?
Yeah, that's usually the employer wants to offer the program, however, they don't want to pay for it. Or they don't want to mandate, and we see this more in the law firm space where coverage is mandated. They oftentimes don't want to mandate coverage, you know, so that's why.
Okay, and next question, they're asking if these plans are for W-2 only, or do you also offer coverage for 1099 employees?
We do, yeah, we do offer coverage for 1099 employees as well. Mm-hmm.
And what is the minimum number of employees for the GSI?
So for GSI, we need 3 lives mandatory plans and 10 lives for voluntary. It just like in the domestic market, these eligible employees really have to be white collar. We don't offer GSI in, you know, with folks that have manual labor. We do offer GSI to physicians, but underwriters are pretty picky about it because it's extremely high risk, only because with voluntary plans, it's hard to get a hold of a physician to get them to fill out an enrollment form. it's like an act of God to get them to fill out a form. And when you can't get people to enroll and you have low participation, you could have claims issues. So there are some occupations that we won't offer guaranteed standard issue, but Mark, you can, I'm sure, help them through that during quote time.
Great. At this time, we have one more question, but if there's agents still in the call that have a question, now is the time to put that in. And so the last question that I have right now, Lori, is for the loss of license. You went over the GSI. Is this also available for an individual pilot to get?
Yes, it is. Yes, it is.
And what is the max they can get for that?
The max that they can get is $25,000 a month, 65% income replacement.
And this is my question. Are they required to have underlying coverage from their employer?
They are not required because they have very difficult time even getting group LTD. And the group LTD, you know, it's important that they keep it if the employer, you know, is paying for it. However, it has the definition of disability that doesn't include self-grounding. As an example, as a pilot, if you wake up in the morning and you're dizzy, you don't want to fly. So it's called self-grounding. They can disable themselves and say, you know, I can't fly, I'm dizzy, or a headache, or, you know, knee problems. There's a lot of things that wouldn't be covered under the group LTD plan. And that's why pilots come to us, but they're not required to have any underlying coverage and usually don't.
Great. And that was our final question.
Okay.
At this time, but I was wondering if maybe I could throw in another question there. So for agents out there, we do a lot of business with Peterson for decline cases, as Lori mentioned, but there's also a lot of different other areas, professional athletes, as she mentioned, also pilots. But I just wanted to reiterate that if you've had a client tell you that they don't think that they could get disability coverage, it's a very rare instance when Peterson won't provide coverage for a client, even if they have multiple conditions going on and they've been declined through all the traditional carriers. And so I guess, Lori, can you give some final thoughts on the process for someone who's been declined at another carrier?
Absolutely. If they've been declined and you want to find out if we will cover them, if it's a condition that is serious, you know, just send an email with a little summary. We don't need to see an APS. And it's pretty quick. We can offer accident only if the underwriters decide that they don't want to take a look at the risk. And again, that's usually when we see a progressive disease. So there's not much that we won't look at. So I would encourage you to, you know, send those over. But also the high income DI is something that I think is overlooked. Not sure why, but I think you know, agents are reluctant to ask someone to dip into their wallet. But if you show, you know, if you sit down and show someone that they only have 30% income replacement or 40% income replacement, you know, let them make that decision if they want to add more coverage. And we have flexibility. We don't have to go to the maximum amount. So I would say there's a huge amount of opportunity in the high limit DI space.
Oh, that's fantastic. Well, Lori, that was our last question that we had, and I certainly want to thank you for your fantastic presentation today. And if there's any agents that want to investigate getting a quote from Peterson, shoot me an email, and the reasons for if your client has been declined or what health conditions they have, and that's all we need is the same things we need for a regular DI quote. And with that, thanks for everyone being here today. And Lori, special thanks to you for your presentation.
Thank you, and thank you everyone for joining.
All right, have a great day.
You too.